honestly speaking, it's a risky play, but we can take it again. I always try trades more than once, right? I have no problem with that. I stop out of something and then later down the line, I'm like, yeah, still looks good. This is kind of the vibes that I'm getting with NIO. Let's see.
Well, yeah, I mean, once you get familiar with stuff too, it makes it even easier. The second, third time, fourth time around.
We got to get above 463 for NIO. That's going to be a bullish confirmation, but I'm going to just kind of see how it would make sense to build a trade setup. So we got to get above this level and then find a higher low and then go up. Let's try NIO again, but let's not just be rash. Let's wait for some real confirmations here. So we can wait for a 4-hour candle close above $4.63, right? That's the first thing. Then we would make a higher high here in this. We would start rotating the 4-hour trend. So at the moment we have low, lower high, lower low. If we're going to get above 463, we make a higher high. So that would be a bullish confirmation. Now, when we get a close over 463 on the 4-hour, right? Putting a limit order at 463. So for example, candle closes way higher, looking to get picked up at 463. So that would become a new entry, and then we can have a tighter stop loss below 424. So for the trade setup, right, we're waiting for a 4-hour candle to close above 463 for NIO. At least for me, that is really going to give me conviction that I'm looking at the right thing and that we're probably indeed going higher, right? So 4-hour close above 463 and then a limit long order at 463. So if you recall our Robinhood trade, right, we originally waited for a 4-hour candle close above a level, and then we put a limit order at that level. So this is the exact same thing for NIO. We're waiting for a candle close above a level and then a limit long position on that level. Our entry is going to be 463, but only with a limit order and after closing a 4-hour candle above it. And we are going to trade it to 562 as target 1, and we can trade it to 604 as target 2. So I think this is going to be the cleanest setup that we can provide. I really want to provide something here that is very likely going to work out. So I like NIO, but it's also a mistake just to try again and again without like getting additional confirmations. It would be quite frustrating if we just enter NIO here again and then in a couple of days it's down again.
Right.
We would rather now really wait and see that bullish confirmation, and then we can jump on board. So the trade setup is long at 463 with a limit order after closing a 4-hour above. Stop loss is going to be 424. Target 1 is going to be 562. And for target 2, actually, let's take 634. But at 562, we're going to close 75% of our position, right? And then we're hold the 25% runner for if we do get to 634. From where we entered to our stop loss is an 8.4% stop loss. And it's kind of needless to say that we're not looking to stop out and lose 8.4% on our account, right? So what we will do is we'll divide 100 by 8.4. Let's see. So we can go in with 12% of our account, right? So 500 is, so let's do 5 times 12. So we can essentially use $60 for this. So 60 divided by 4.63, that means that we're, well, if for a $500 account, let's say we're going to buy 13 shares. Right?
13 shares, perfect.
Yeah, 13 for a $500 account with that stop loss. Just want to make sure that I'm 100% correct. So 463 is the entry, 424 is the stop loss. That means a 0.39 cent stop per share. And if we have 13 shares, that accounts to a $5.07 loss, which is about 1%. Perfect. But obviously, if we get to 562 and then to 634, we're going to get more of that in return, right? And then even for the people that kind of like pattern trading, which that's not, that it's not what I'm teaching, right? But it's not because it's not what I'm teaching that I'm not aware of how it's basically being formed. What we can kind of start seeing then on NIO, not yet, but is that we have a left shoulder, that all of this right now is our head, and that at some point, if we're going to get back above and test 463 into support, then you would kind of see an inverse head and shoulder, right? Something like that. You see left shoulder, head, right shoulder. Now, until that is basically confirmed, I don't want to be in it. So I think that's going to be a very good play for NIO, to be honest. Yeah, and that's the only play for NIO. Like if it draws down lower, we're not interested. It can go way lower. let's do maybe a couple of more of these high quality setups, dude.
Yeah.
Like, I agree that we want to get some positions out, but it's way better, right? Way better to get 2 or 3 positions that are going to be like our new Robin Hood position, rather than just giving 6 options and it not really doing anything. So I'm just looking at my watch list, also thinking about so GME for record, right? We have already put that in the watch list that is still not entered, but I really want to emphasize, you notice, like nobody else, it's not because it's going to take 2-3 weeks that it's not relevant anymore. So that is still very much on my radar as well, right? Something else that we can look at is HPE. I recently did earnings stream on this, and this broke into new all-time highs. So this has quite a lot of potential. Now, I'm not looking to buy a green candle here. I want to see some kind of a retracement into a higher low and then basically following the uptrend. So it could be just as simple for HPE to wait for a retest of the previous all-time high, which is 1948. So we're currently trading at $21.84, right? And I'm bullish on it, but I would like to see a pullback to get involved. So I'm not going to buy here at 21.84. There's way too much risk that it basically pulls back and that it basically was going to punish people who are long right now with stop losses below $20, thinking that, yeah, we're now going to 30 straight away. So my idea is move below 1948, 4-hour candle close back above during regular trading hours is our long entry. I'm looking at 25 as a nice level for HPE, but I want to kind of front run that also a little bit. So I think 24.88 is going to be a nice profit-taking target. Let's give our stop loss some room here. Let's put it at 17.31. And let's aim for 24.88 as a first target. And I honestly, man, if that hits 24.88, we close 75% of our position and the rest can really just run. I don't particularly have a target for this in mind. It's new all-time high, so that's basically a free runner. Let's see. So applying FIBs to see where that is probably heading to. Let's say 1618 and then the 1272. Like, this has a lot of potential, right? The 1272. So the first target there would be 25.31, but we want to front run that. So we're taking our profits at 24.88. And I mean, honestly speaking, for the runner, we can target really high and aim for 35. It's simple. This is something that is breaking into new all-time highs, and that might be a very, very lucrative play. The other option that I'm thinking, right, I'm kind of debating here whether I want to wait for a move below and a 4-hour candle close back above, or whether I actually just want to put a limit order. Let's make it more simple. Let's just put a limit order at 19.47. It's going to be even more simple. 1948 is our entry. Just with a limit order, we're now trading way higher, right? So we're looking to get picked up in a limit order when price draws down. Stop loss below 17.3. And then, as I said, target 1, 24.88, if I recall correctly, right? 24.88, that looks good. That's a 2 to 5 risk to reward. And then we can head for 35 on our runner. Now, let's see. So the stop loss percentage is about 11%. So let's do some quick math here. We can use $45. So 45 divided by 19.48, which is our entry. It's basically 2.3 shares, so 2 shares and 30% of a share. So if you can work with partials, that is the best. I'm also personally on exchanges that allow me to take partial positions. That allows you to be way more accurate with your risk management. Now, if you're, for example, not on an exchange that allows you to buy partial shares, I mean, the conservative thing to do here, right, is simply with a $500 account to buy 2. Very simple. So 1948 is the entry. And the stop loss is 17.31. So that means that per share, if your stop loss hits, you're losing $2.17. You do that times 2, that's $4.34. That's less than 1% on your $500 account, right? Because you got to think, imagine if you put in your $500 and you stop out, now all of a sudden you're losing 11%. That means you're losing $55. That's not terribly much money or anything. It's not the end of the world, but just for the purpose of that account, it's going to be very difficult to recover from that. That's just the honesty. Like, if you start with a $500 account and you're down $55, it's going to be difficult to recover from that. Not impossible, but the chances are that you're going to do basically higher risk plays and so on to kind of make it back. And we want to avoid the possibility of that. So let's be very, very simple. HPE, let's put an order at 1948. 1948. So we're not even looking at additional candlestick confirmations. This is going to be simple as can be.
Would it be safe to say for somebody, who's taking your coaching strategy and knows how to do it, would it be safe to say that the safer entry would be to wait for the 4-hour close?
Yes.
Okay.
The problem with that is that I would want to then explain that, yeah, move below 1948, the 4-hour close back above that level is the entry, but then the stop loss, right? The stop loss goes below the low that is made below 1948 before we close the 4-hour back above. You know how that works,
Yeah.
but that is a stop loss that I cannot tell you because I don't know yet how far it goes. Like, does this nuke to $19 and then close back above 1948? Perfect. We put our stop loss at $19. But say it goes to 18.5 and then closes back above 1948. Well, then our stop loss goes on 18.5. And according to where that stop loss is, the risk management is going to be a bit different, at least the position sizing. And just for this $500 follow along, it's going to be simpler for people to follow along if they have an entry and a fixed stop loss. But absolutely, Doug, like people who would follow my coaching strategy would get something. He said, I'm just going to be honest, you'll get a better risk reward and a safer trade out of this. And that requires joining my coaching. But this in and of itself, what we're already doing here, essentially for free, right, is already very, very decent trading. It's very likely to going to work out as well. So it's not that I'm giving here a B-tier solution. No, it's also a very decent solution.
No, I love that you mentioned that about the 4-hour candle close, how it's necessary to understand the whole strategy in order to do that. So it does make more sense to do it the simpler way.
People who are following my coaching, they should and they will understand how that works. And the results might be, a bit better. Doing it this way with a fixed order and a fixed stop loss, if we know how much we're going to allocate, nothing bad can happen to us. Nothing.
Right.
Again, we're not going to be down $55 on a $500 account ever. At least not because of one trade going wrong. Did we have TripAdvisor already in?
Yeah, we do have that one. So that one we're looking for a break below 1373.
Yeah, and then a 4-hour candle close back above. Actually, that was I was looking at Trip, and this was the play that I was going to give, but then I remembered that it was already given. That is, just to reiterate, that is also something to be patient for. That can take weeks or months, but that does remain relevant until it's over. I want to take a look at some other things here as well, like could call it more risky, but something like Aurora Cannabis, right? On the weekly time frame, this has been essentially down forever, and it's still not looking all too great. However, I do think that there's something to play. So if I'm looking at this chart, right, and again, cannabis company, what I do like about this chart is that we had a low, then we bounced all the way up into a lower high. We came down, made a slightly lower low, bounced up into a lower high, nuked down all the way into a lower low, and then had a vicious move up, which is basically broken above a last lower high, basically rotating or potentially rotating this trend. So I'm not trying to become an Aurora Cannabis investor. I'm not trying to start a long-term position, but I am interested. Also, not too long from here. So currently we're at, what, $5.72. I do want this to go lower before essentially being interested. So let me see a couple of levels that are really good candidates. So I have the $4.39 level. I'm just going to see if that also lines up with some fib levels that we're always using. I'm using my fibs here to verify. So yeah, that level that I was looking at, $4.39, that aligns very closely with the 618 retracement. So I'll give a couple of options here. And so all I did here, right? Like, again, this is the most important thing, is reading price action. You got to see that this is a low, that is a high, but that it is a lower high from the previous highs. This is a lower low. This is a lower high. This is a lower low. And now we have a higher high. That means we're now looking for a higher low and then more higher highs. Just because the trend seems to be rotating to the upside doesn't mean that if you buy, you're going to be profitable, because the chances are, again, if you buy here, that we're still going to come down something like 22%, right? Which is a significant move. So a couple of levels for us to look at. We have 544, we have 439, and we have 404. I don't know exactly to where price is going to go, but I do know that if price gets to these levels, that yes, then we can really play our standard strategy, which is waiting for a move below either of these levels. But now, instead of waiting for a 4-hour candle close above the level, I'm actually going to suggest waiting for a 1-hour candle close above that level, or back above that level, I should say. So we have 544, 439, and then 404. Now, 3 levels of interest. And what we are doing is we're waiting for a move below the level. Then the moment it closes a 1-hour candlestick back above either 544, 439, or 404, that can be our entry. The stop loss will go on the low that is made below either of these 3 levels before we close the 1-hour candlestick back above. So I cannot tell you yet what the exact stop loss is. Once our alert, so once our levels gets breached, we don't do anything, not just putting a blind order there. We just wait until price closes back above the level. And then we see how low have we gone below this level before we close back above, right? And that is the stop loss. So there is no fixed entry.
Perfect.
And no fixed stop loss. And this is really then going to be an example of my strategy, which is waiting essentially for a deviation below a level and then getting back above the level to essentially go long. Now, let's see in terms of profit targets, right? If we get in a position around that first level, 544, which once again, 544 is not our entry, right? No orders there. The 1-hour candle close back above that level is going to be our entry with a stop loss below the low that is made below that level. 617 is going to be our first target. Wherever we enter here, 617 can be a good first target. Now, if this nukes down very significantly and spends some time trading here in this big wide gap without closing back above, we can be specific and we'll provide an update for the people following our channel with this. But for now, this is how I'd say it. So the target, if we get into a position based around that 544 level, is going to be $6.18. And the second target can be $6.83. So 618 and 683 are 2 good profit-taking targets for this.
And then we'll wait, if it does happen and go, back down to like 439, 404, whatever, we'll just update later when that happens.
Exactly, but the idea is going to be the same. We want to see a move below either of these 2 levels. And the moment we close a 1-hour back above, that is going to be our entry with a stop loss that we are putting below the low that is made below that level. And then indeed we will update once we are in the trade. We will give profit-taking targets, just not to be too confusing. For now, what I can say, if we're in a position from these lower levels, then trading it into $5 is already going to be a nice move. So that is going to be likely a profit-taking target, but we will keep updated with that then. Just horizontal levels. Get below, close back above, and way in advance are we able to already kind of visualize a trade setup. So I would not be interested to long this here at all. It's very likely going to sweep some liquidity. That's when we want to be interested, once that happens. So the sweep of liquidity, right? That is the part where price goes below the level. That is the whole reason why I say we're waiting for a move below the level and then closing back above. It's because the move below that level, that is the liquidity sweep, and you don't want to get caught in this. So say, for example, you're long here, and what you say, well, I'll put my stop loss on one of these higher lows. Well, that's very likely not going to work. That's very likely to basically going to get raided. You're going to get kicked out more often than not. Now, knowing that, trading is basically about exploiting other people's mistakes all the time. So you don't make these mistakes yourself, and then you exploit the mistakes that other people are making.
Can I ask you about like
Yes.
a rapid fire? I have like two or three real rapid fire ones. Spend like 5 minutes total on them. Because we went over these ones in the past. It's Carnival Cruise, Macy's, and American Airlines. That's why I want to see what your take on those ones are. So we've done props on those ones in the past before the challenge.
I see that this has this still has levels for me. Carnival Cruise Lines. Let's see. Like, for me to be bullish further on Carnival, I would like to see it get back above 1624. It's as simple as I can put it. So we would get, so right now that 1624 level, right, it acted as resistance here. It acted as support here. And now it's acting as resistance again here. So very simply put, we got to get above 624 and turn that level into support. And then we're probably headed for, let's see, 1768 and then 1974. That's my idea. And if we get back below $15, this is probably going to get drawn down way lower. So I'd be careful with this. And below $15, like, again, not trying to FUD anybody out of long-term positions, right? I don't think that this is very great if it now drops below $15 again. So it would really have to, quote unquote, reclaim 1624, which how does it do that? Well, at the very, very least, we got to see a 4-hour candle closing back above 1624 during regular trading hours. So no pre or post market low volume move. No, it needs to be a 4-hour candle during regular market hours back above 1624. Then potentially using 1624 as a limit long entry, targeting first into 1768. So let's make that kind of that exercise. Entry at 1624, but only after closing a 4-hour above. So if you're longing anything now, saying, well, it's a better entry because price is lower, it's a way less safe entry is basically what it is. And then the stop loss can come at 1553. So entry 1624 with a limit order after closing a 4-hour above, target 11768, stop loss 1553. That's going to be a 4.4% stop. You'll be able to use $113 for this in your $500 account. So wow. 113 divided by 1624 would equate to, well, 6.9. Let's make it 7 shares. Because the drawdown per share is only, so from 1624 and the stop loss is 1553, right? That is only a 71-cent loss per share. So if we do 7 shares, right, that's going to be a $5 loss rounded up. But if we hit our target, that is already going to be, again, you know how it works, that makes up for it, right? So that's the idea on CCL. Macy's right now, interesting for me at $15.10. Move below, 4-hour candle close back above, long position, stop loss on the low that is made below 15.1 before we close the 4-hour back above. And the targets for that are going to be, and this is really going to be a swing trade, right? 22.10, target 1, 25.10. So 22.1 and 25.1 are going to be targets. And an entry, right, what I'm looking at is a move below 15.10 and then a 4-hour close back above. So I am aware that Macy's is currently trading at $18.23, but this is really not a chart that I now want to participate in. It's not interesting. It's very unlikely that this chart goes vertically up without coming back down. So not interested. Too long here, right? From lower, yes. American Airlines, right? I'm going to be 100% honest with you. This is looking terrible. This is not looking good at all. I can understand that people would say, oh, we're coming to some local support, but this is not a nice chart at all. So if I'm looking at this chart, right, it made an all-time high in 2006, right? It's never, ever reached above that all-time high. It doesn't take a rocket scientist to understand that stocks are making all-time highs left and right. Like, not all the stocks, but plenty of stocks are doing that. So this is also something that I often like to look at. Look, this is the American Airlines chart denominated in SPY. So we're, instead of AAL/USD, this is, if you normally type in American Airlines, you see a valuation in dollar, right? And that is how much one AAL share is worth in dollar terms. This chart right here, right, shows you how much of a SPY share you need to get one AAL share. It is basically showing you how American Airlines is performing against the bigger market, like the SPY itself, the benchmark. It's very bearish. That's all I can say. Like, honestly speaking, again, I don't mean to flood anybody out of long-term investment and positions, but I will say that you've been terribly wrong if this has been a part of your portfolio essentially since forever. Not for a trade, but in terms of just long-term growth perspective, this is horrible, right? It's basically this company is getting eaten up by the benchmark, which is the market, the SPY itself. So if we go back to this chart, right, it looks a little bit better. But the real story there, right, is that something like SPY is just massively outperforming this. So if I am going to trade this, it is going to be when I see a lot of, and I mean a lot of pain and essentially hopelessness in the market. So what I would want to see is getting below 825, then closing a daily candlestick back above 825, putting my stop loss on the low that is made below 825 before we close the daily back above. And then I might be interested to play it back into 16. Literally a big swing trade. However, if this was a game of smash or pass, I would say pass. Because there's a lot of better things in the market than the price action on American Airlines. So 825 is the only level here that I'm interested at. We get a move below that, then a daily candle close back above. That's an entry criterion. And then we can really talk about trading it back up, but only after a lot of people are essentially still to be puked out of this market. So a lot of people are going to be long here since 2020, the past 4 years. And they're going to say, well, that low in 2020, that was the low, right? Wrong. That's likely not going to be the low. We're likely still going to sweep that low. And that is going to get very difficult for people holding on to something like this already for a while. And I kid you not, right? If that level doesn't hold, I'm looking at $3.96. And if that level doesn't hold, I'm looking at the all-time lows at 145. So there's 3 good levels for AAL from a macro perspective to do business from. That is this, that is this, or that is this. One of these 3 things. And I would stick with AAL with monthly levels of interest and then a daily candlestick confirmation, right? So sometimes, let's say that our basic is like a 4-hour confirmation. Sometimes we're going a little bit closer on the ball with a 1-hour confirmation. But if we really, really, really want to be cautious, we can go for a daily confirmation, which that's what I would choose here for AAL at least.